record on computer.
Can I bring my new puppy on? Do you think that would get
Like, do you see my puppy?
viewers?
Oh, I think so.
No.
I'm also going live, so.
Well, he's not really a puppy, but my dog's in there. He's behind me.
What's the new puppy?
Oh, yeah. Here, let me go grab mine. I'll show you mine.
I want to see a puppy.
You can see Zeke.
Zeke's
I have
a good
headphones
boy.
on.
Daisy, you're going to be famous.
She's going to be
Aw.
Facebook
Daisy.
famous. When did you get a new puppy?
Last week. Found her at Mount Vernon. She's like, look how small she is.
I can't see. Hang on. I'm waiting for this
Yeah.
to go. Oy. It's thinking. What happened? Oh. All right. And writing all this stuff. Amanda, how much time do you have to share with us?
I can still do like 20 minutes or so. 30
Okay.
minutes.
Okay.
Is that okay?
Yeah. Oh my God, she's so cute. I love her.
Oh, you can see her now?
Yeah, I can see her
Okay.
now. It was connecting before.
Look, doesn't she look like the gremlin, Gizmo?
Yes.
And
Yeah,
Gremlin?
totally.
Yeah. Mm-hmm. Gizmo. Okay, you can go back now.
No, keep her on.
Keep her on?
Yeah. Okay.
Well, I'm making more magic right now, so, I need my hands.
Yes. Okay. To cast the spells.
Right.
All right. Not that everyone hasn't been hearing us already, but we're going live because that's what happens. It's so
Was that
weird.
his dog? I was like, what's that noise?
She sounds like a gremlin.
That's my bulldog. Sorry. Someone just knocked on the door.
Oh.
Don't let him in. All right. So here we are. You want to do your watch party? Say hi.
He's not on here, but maybe it's because his now streaming live.
Can't hear me? Can you see
Where did
me?
he go? Click
No,
to
we can't see you.
expand.
I can't see you on Facebook.
I
I'm
can.
back.
I can. Oh.
Oh, you can? Oh, wait, now I see him. Just kidding.
Click
JK.
to expand. JK. There he is. Wow. This is always
Watch party.
such a hot mess. Yes, you're there.
All right. So.
Hi.
Hi. Here we are. Wow.
What are
Why
you
is that always
doing?
such a hot mess?
Hey, gang.
What's everybody doing?
I feel like this is very awkward.
Because it's like they don't make it easy on us. They have it like, it's recording and doing it live while we're just sitting here trying to get set up. So that's awkward. And then
He didn't want to be a movie star anymore.
wow.
Oh.
How you like them apples? So we're back. I know we were here yesterday, but we're back again. Plus Rob this time because he was supposed to be here yesterday. Where were you?
Sorry.
What were you doing?
I was making mortgage magic.
That's what you say. I believe it.
Yeah.
So we wanted to ask you about, because I think, that I work with a ton of first-time home buyers. I think Amanda does too. But I think even for experienced buyers, maybe loan types are something that they are not as familiar with, or like what you need as far as credit and qualifying and how you get certain loan types over others. Does that make sense, what I'm asking?
Yes.
Explain
Yeah,
it
does.
all. Start wherever you'd like. No pressure.
Wow. Yeah. I think my heart grows.
We could go alphabetically. Let's start with conventional.
Conventional loan is basically what it is. Conventional. It's your most conforming loan, the most run-of-the-mill loan product that there is. But there are subcategories of conventional loans as well. So there's for first-time home buyers, as you mentioned, there's Home Ready, there's Home Possible, there's different grant programs. There's your three main categories. I guess 2 to 3 main categories are going to be your conventional, FHA, which is a government-backed loan, VA, which is for veterans, and then non-conforming loans, which are going to be like non-conventional, non-government loans, more like a private loan.
Like
That makes sense?
Yeah, yeah. Like the bank has
Like
a pool of money that they would lend to you, rather than
yeah. So so it's like it's not going to be like FDIC insured. It's going to be a private investor, where those are going to be more. The only time you'll probably see those if you have like a weird property. A jumbo loan is usually considered non-conforming. Jumbo means like you're talking a purchase price anywhere over $600,000 plus.
Okay.
So that's your category. So your first-time home buyers, where the categories they're usually going to fit into is going to be your FHA loans and your conventional loans.
Mm-hmm.
And each situation is going to be a little bit different.
What are credit scores? What do credit scores have to be for each of them?
So typically, on a conventional loan, you probably want to have a 640 or above.
Mm-hmm.
FHA, typically, without the COVID season going on, you'd be at 580 or above. But right now, you're probably going to be 620 or above for FHA.
Okay.
So that's changed.
Yeah. So, yeah.
So those are two things that we deal with a lot: are credit scores and down payment.
Right. Right. So it's really, I mean, there's no one size fits all, right? So when you speak with your mortgage banker, your loan officer, a lot of it, each situation is going to be a little bit different. The best way I can describe it is, if you got a stomach ache, you got to go see a doctor, and they have to diagnose you. They have to figure out what exactly is going on, because if you go to WebMD, you're dying, right? So you really gotta, each situation is gonna be a little bit different. So, yeah, right. So the big thing is like the 3 main things that we look at as far as what programs and interest rates you qualify for are definitely going to be your credit score is one. But say if your credit score is a little low, but you have a lot of money saved up in past assets or reserves, then that might help your situation, or your down payment might help your situation. So the 3 main deciding factors are going to be credit, assets, income, and your down payment, basically. So that helps determine what loan program.
Yeah, that makes sense. What would I don't know. I lost my thought, I guess. Amanda? Did you have my thought where I was going with that? I'm sorry.
So if someone didn't have credit, so I've had some people be reaching out recently that don't have credit. So, I mean, that's an issue as well, because it takes time to build it.
That's like is that like a new, because I was just talking to someone today too, and they said as well, like the scenario is they're going to be helping these people buy a house because they don't have credit. And it's like a younger generation of buyers seem to not understand that credit score is necessary. So are you seeing that?
It's a hit or miss. I mean, it happens every now and then for sure. The easiest way to get around that, and a lot of people don't know about it, is if you have a family member or a spouse that will add you as an authorized user on a credit card. So say if I didn't have any credit and my mom adds me as an authorized user on her credit and refresh that credit within, say, 20 days, then all of a sudden I'll pick up their payment history and I'll get a score.
Oh,
interesting. So would that be what you would recommend to people to do? I mean, is that, or like, what about the kind of credit card that you can get that you like it has a limit on what you can spend. So you'd fill up gas and then go pay it off.
Yeah. Yeah, absolutely. Yeah. I mean, you want to establish credit. So when, I don't want people to go to Credit Karma because Credit Karma's credit scores are not 100% accurate. But the nice thing about Credit Karma is it gives you an idea of what to do to improve your credit.
Gotcha.
And what they'll do is, so based on your situation, let's say, for instance, if you don't have any credit, it'll say, hey, we recommend this credit card to establish credit. Right?
I didn't realize it did that. That's interesting.
Yeah, I didn't know that either.
It does.
I'm learning new stuff.
Wait, learning.
Yeah. Learning's fun.
Well, because what I was gonna say, but it doesn't sound like it is. I was gonna ask if Credit Karma is like to you like as estimate is to us.
Yes. 100%.
You know.
Yes, 100%.
Yeah, but it does have some helpful information.
Have
it
you
definitely does.
Less restrictions with COVID?
Less or more?
Mm-hmm. Well, because I know that when COVID first happened, they raised credit score requirements, and they took away some, like down payment assistance and things like that.
Mm-hmm.
So,
that's going to be based on the bank. So it's not necessarily like OFA is a down payment assistance program.
mm-hmm.
There's 3 or 4 of them, but none of them cut off their funds. They're still doing down payment assistance. Just a lot of the lenders cut it off.
Okay.
So, myself and Revolution Mortgage, we didn't make any overlays. So a lot of the lenders, what they did is they put in overlays as far as like, we're not doing this product, we're raising our credit score requirements, etc. So what we're doing is we only took away a few products, but down payment assistance is not one of them. So that's still something we offer.
Hey,
everything is a little slow. Go ahead.
Sorry. This is so not on topic. I'm totally interrupting you to say everyone needs to say hi to Sasha, our longtime fan and listener.
Hi, Sasha.
Sorry. Okay, continue. Yeah, right?
Well,
she also said, Credit Karma.
Zeke's back.
Zeke's back. No, you were saying how Revolution Mortgage didn't do a lot of the stuff that the overlays.
Yeah. So we didn't put any overlays in. Chase, I know, even beginning of when this whole thing hit, they put in credit score requirements of 700 or higher, or they weren't touching it.
Yeah. Mm-hmm. Yeah. Is that still a
thing?
So
I don't know. I'm not sure. I don't think so. The whole thing is, like they said, it was just a huge mess, because what happened is rates bottomed out, right? Rates on a 30-year fix right now are like 2.875 on a 30-year fix. Lowest they've ever been in the history of mortgage rates.
Yeah.
Right. So what a lot of people are doing is they're refinancing. Everyone's refinancing their homes, and we're also in the midst of purchase season. Right.
Yeah.
So what a lot of the banks and lenders did is they artificially raised their interest rates, maybe got rid of some products that take a little longer than expected, so they can really focus on what they're doing. Right. Because it's a problem when you can't facilitate purchases in a timely manner. So we have to slow down the influx of refinances, so we can obviously close purchases on time.
Yeah, because that's important too.
Yeah, very much so.
One of the things I wanted to kind of talk about, if we can, or if you even think it's worthwhile, is like the difference between the loan types. So like the difference between conventional versus FHA versus VA. Like I mean, obviously we've been talking about credit score being a different like qualification for it. Down payment, does that differ anymore? I know there's PMI involved with some of them versus others. Like what would that, like, why would someone want one versus the other for loans?
Ultimately, obviously a VA loan is going to be for a veteran, right? Mm-hmm. So if you don't serve in the armed forces, National Guard, or anything like that, then you can't get it. A VA loan is one of the best loans. So if you did serve in the
Yeah.
military, or in the military, or did serve in the military, definitely something you want to look into.
100% take advantage of it. It's a benefit for you. We
Yeah.
thank you for your service, and you should 100% use it.
Absolutely. Yeah. The benefit of the VA loan is you can put zero money down. So
Yeah.
not a dime to put down. There is a thing called a funding fee. Not to get too much into it. That's something obviously you would discuss with your loan officer. To avoid PMI or mortgage insurance with VA, they charge you a one-time upfront funding fee that's rolled into your loan. So you don't pay it out of pocket, it's rolled into your loan. The only way to not pay that is have at least 10% disability through the VA.
Okay. Is there too a limit? I mean, they from what I remember, and I don't know if it's still like this, you could borrow up to, was it like 500,000 for that loan, for a VA loan, and then but I mean, you could borrow up to 500,000 for that. So like I had someone owned a home, but they were able to buy another home because they were still within their limit on that. Does that make sense?
Yeah. Yeah.
I
So
thought you
there's
only have one VA loan at a time.
No, that's not true.
Oh.
You can have as many VA loans as you want. So there's a cap, right? So there's a loan cap. So what we do is we pull it. It's called a COE, or a certificate of eligibility, and you can have, say, one loan that you have whatever $100,000 loan amount on, and that's the guaranteed amount through the VA. And then they can buy another home that's, say, another $100,000. And as long as they're under that cap for the eligibility, they can do it. So, and even if you go over that cap, you still use whatever's left of the guarantee and just put a little bit more money down. That's all.
Gotcha.
So, quick question though. I thought VA had to be owner occupied.
Well, it does. But say hypothetically, you buy a starter home as a first-time home buyer with a VA loan, and then you want to upgrade, you have children, get married, and you want to keep that home to, rent it out, or you just don't have time to sell it, then you can still use your VA loan on the primary resident that you're upgrading to.
But you can't have a VA loan on both of them.
You can.
Yes.
But how is it? It will be owner occupied. So how is that technically legal?
Well, it will. I mean, we just have to prove that you're moving into the house as a primary resident, right? So, I mean, I've had clients, like, say hypothetically you buy a house in Texas on a VA loan. You get a new job in Ohio and you want to use your VA loan. Well, you can do so. So you can either sell that house later on when you close on the house in Ohio, keep it as a rental property, as long as we can prove that the home that you're buying using your VA loan is your primary resident.
They don't
FHA
look at the
is
other
a little
loan.
bit different.
Yeah.
Oh.
Correct.
Yeah.
I didn't know that.
Yeah, it's just the cap
Yeah,
you have to
FHA
say.
Right. Yeah, there's a cap. FHA that's different. So the only way you can have two FHA loans is if you have enough equity in the house, or you can prove that the house you're leaving is not good enough for your family. You're having a baby or something like that. So a lot of more loopholes to jump through for an FHA loan, where a VA is not, as long as you're in that cap.
Okay. So for qualifying for an FHA loan, it's a lower credit score. So someone with a lower credit score could get that. There's also PMI on it, if you can explain that, and that stays for the life of the loan.
And it's also a lesser down payment than a conventional.
Is it, or are they the same now? Yeah.
I have 3.5 to 5.
Sometimes.
Yeah, but conventional is 2,
conventional is 3.
Oh. But isn't it a higher credit score to do that? Or not not a higher credit score, but isn't it a higher interest rate to do that? 3% conventional? No?
No, as long as, you don't, the PMI could be a little bit higher, the mortgage insurance.
Okay.
Yeah, but no, you can do 3% down. So that's kind of like we were talking about, like you have a conventional, you have your 3 main categories, but then you have like subcategories for each single one.
Okay.
Yeah, so like you got to go to the doctor, right? You don't go to WebMD. So what you have is, so conventional loan, basically what that is the difference between a conventional and FHA is FHA is insured by the government, right?
Mm-hmm.
So the mortgage insurance, PMI or MI, what people want to see what it stands for. MI is mortgage insurance. PMI is private mortgage insurance. Private mortgage insurance is on a conventional loan.
Oh.
MI is on an FHA loan. So it doesn't matter.
So are they two different things, right? I mean, it's the same, but it is two different things.
Yeah. So the difference between an FHA insurance, mortgage insurance, and conventional mortgage insurance is FHA is a flat rate. So no matter what your credit score is, no matter what it is, they're going to charge you, and the mortgage insurance premium is going to be a flat rate no matter what, right? But it is on there forever, unless you refinance out of it or sell the home. Whereas a conventional loan, it's going to be based on the program. It's going to be based on your credit scores, your down payment, all that stuff. So like car insurance, right? So if you have bad driving records, speeding tickets, DUIs, hopefully no DUIs, but you're just like a crappy driver, your premium's going to be high, right? So your insurance is going to be super high.
Yeah, ask my kids about that.
Risky, yeah, so as long as you're a good driver and you're less risky, then they're going to have a lower premium. And that's the same thing with a conventional PMI, private mortgage insurance, because if you don't have 20% down, it's required. And what we do is we shop it around with, there's probably five or six main mortgage insurance companies for conventional, and we'll shop it around with them to see who gets us the lowest rate for our clients, and that's who they go with.
That's the winner.
And the difference between, and then what the difference between that and FHA is the mortgage insurance, the PMI mortgage insurance will fall off of a conventional loan after you have enough equity in the house.
Mm-hmm.
So it goes away.
Interesting.
Mm-hmm. There's a lot of nuances.
There's a lot.
The credit score is really the
I know I don't look that smart, but I'm
factor.
pretty smart.
Hey, I know you are. You're a wizard. Wizardy wizard. That's
right.
Dr. Livingston, the mortgage doctor wizard.
I presume, yes.
Yes.
Am I a house wizard?
Yes.
Huh?
I was like, am I a house wizard?
Yes. You and me both, sister.
Separate people.
Two different people, not the same, but we're both wizards.
Right.
We're just in each other's brains. That's it.
Yeah. Yeah. There's a lot of nuances with mortgages, and there's a lot of programs. Like, Amanda, to your point, like if your loan officer is not going over a lot of different options with you, they're doing your client a disservice.
Mm-hmm.
Because a conventional loan is actually less of a down payment than an FHA loan.
Okay.
Like you said, though, yes, if you're not a first-time home buyer, then yeah, your rate might be a little bit higher, and your PMI, your mortgage insurance, can be a little bit higher because there's no equity in the house, right? If you're a first-time home buyer, then you may fit into one of those subcategories of conventional, which is a home ready or a home path program.
Okay.
And if you fall into those categories, then your mortgage insurance is going to be lower. You're going to have a good interest rate, even if you're putting 3% down.
Okay.
Yeah.
Yeah,
but
I think I've had someone do like a lesser down, but it was a long time ago too. It was years ago. So I'm sure things have changed too.
Oh yeah. Well, that's the thing. Things are changing rapidly right now.
Yeah.
Right. Programs are coming. Programs are going. It's ever changing. I mean, right now, especially with COVID, I mean, products and guidelines are changing every week. So we have a call every single Monday just to go over, what the changes are, what to expect.
Yeah.
So you really want to make sure, if you're buying a house, refinancing, whatever it is, that, you're up to date with your loan officer is going over all the options and being on top of everything. So.
Yeah, for sure. It's I can't even imagine what all you have to keep track of. Fortunately for our side of it, it isn't. I mean, what we're dealing with is just trying to figure out how to get people a house. But that in and of itself is another.
I'm like, so are they.
Yeah.
What can we give up now to get?
Mhm.
Right.
Yeah.
Anyway, Amanda, you need to go, right?
I do.
Oh. Well,
We'll go get them in contract.
yeah.
I hope so.
Yeah.
Send
Make the
them to
best
Rob.
offer
Rob will
ever.
get you in contract. Rob will get you the magic.
They're
gotcha.
actually a cash
Oh.
buyer.
Oh,
so I don't
never
need
mind.
a lender.
That doesn't
Well, you
even
should tell
matter
them that-
anymore.
No. It doesn't.
Yeah.
It doesn't matter. I'm not saying that it does. I'm just saying like.
No. Yeah, no. I know. I'm just saying. I'm just merely commenting that
it is
cash doesn't
crazy.
even mean
I
anything
know.
anymore.
It doesn't. So.
Yeah.
Well,
That's
thank
crazy.
you for joining us, Rob. It's always a
Yeah.
pleasure.
Yeah.
If you have any other questions?
Yeah, my pleasure.
So
What's that?
I said, if you have any other questions, let Rob know.
I'll link
Yeah.
Rob's linked in the title, so you can reach out to him that way. But we can add him in the comments too, so you can see, call him.
Yeah, and what I would say is no question is a dumb question,
Oh,
and
100%.
I know a lot of people a lot of people think that they're scared to start the process. It's all confidential. Everything that we go over is just going to be, it's a great way to plan for the home that you want, because the last thing you want to do is start looking at houses, fall in love with a house, and you want to put an offer in, but then you realize it's way too much. It's out of your budget. So it's always good to start with us to figure out what the best options are, how to improve your situation to where we can get you the best loan, the best rate, and the best product for when that time comes.
Yeah, and it's no obligation. No, well, you just said that, but yeah, it's not just because you're starting the conversation does not mean you have to buy a house tomorrow.
Right.
So don't worry about that.
It's free, completely free.
Right.
So some people have asked me, is there an application fee or anything? You don't pay anything.
No.
So.
Yeah. That's good to know too.
And there's a lot of information out there. I don't know, like we could probably talk for 2 hours on this and still not scratch the surface necessarily. So feel free to ask anything. I have a client right now. I'm like, just ask, like whatever. You don't know what you don't know. And listen, I'm 7 years in. So are you, Amanda, probably the same thing. I still come up with stuff that I have never heard of before or have any idea on. So it is what it is. Ask. So, all right.
That's
I
how
will
we
end
learn.
this. Yeah, exactly.
Right.
Knowledge is power. So
Buy
you
houses.
all have a wonderful day.
Sell your house.
That's what we need.
That's what we really need.
What we need is some people to sell. Maybe I'll sell my house.
I know.
Yeah.
Who wants to buy it?
I'm always
There's
like,
a lot of work that
maybe.
needs to happen in
Maybe I
this place. Rob, you sell your house.
Okay. Done.
I like it. It looks good. All right, Amanda's like, I gotta
You see
get
all
out
the
of here.
bourbon bottles I got?
Yeah,
I just see that.
Yeah.
I like it.
The important things.
Yeah.
That is the important thing.
important stuff. Yeah, I need that.
All right, you guys have a good day.
Bye.
Bye.
All right. See you guys. Bye.